Before we dive into the world of commercial real estate investment, take a moment to like, subscribe, and share this video with your connections. Being part of our content community opens doors to a wealth of knowledge and growth. Now, let's jump into the fascinating world of commercial real estate investment. Commercial real estate, a term that may seem daunting, is actually a lucrative investment opportunity that is more accessible than you might think. But what exactly is commercial real estate? Well, in the simplest terms, it refers to properties used exclusively for business purposes. This broad sector encompasses a variety of property types, each with their own unique investment potential. Let's consider a few examples. Office buildings, whether they're towering skyscrapers in a bustling city or modest structures in a quiet suburb, fall under the umbrella of commercial real estate. Similarly, retail spaces, from expansive shopping malls to quaint boutique stores, are part of this sector. Even warehouses and industrial buildings that facilitate the flow of goods and services play a crucial role in the commercial real estate landscape. Each of these property types presents different opportunities for returns, based on factors like location, tenant demand, and market trends. Understanding the basics is the first step in your journey into commercial real estate investment. Opening. Investing in commercial real estate involves a series of strategic steps. First up, let's talk about market research. This is where you get your hands dirty and soak in all the information you can about the commercial real estate market. You'll want to understand the economic trends, property values, and rental rates in your chosen area. You'll also want to keep an eye on the competition, and consider factors like location, access to amenities, and potential for growth. Remember, knowledge is power, and the more you know, the better your investment decisions will be. Next, we move on to financial analysis. Here you'll crunch the numbers to determine the potential return on your investment. You'll need to consider the cost of the property, potential income, operating expenses, and financing options. It's all about balancing the risk and reward and making sure the numbers add up in your favor. Don't forget to factor in potential tax benefits and depreciation, and always seek professional advice if numbers aren't your strong suit. Now, on to property selection. This is where you take all the information you've gathered and use it to find the perfect property. You'll want to consider factors like the condition of the building, potential for renovations, and the suitability for your intended use. Remember, not all properties are created equal, and the right choice can make or break your investment. Next up, due diligence. This is where you verify all the information you've been given, and make sure there are no nasty surprises waiting for you. You'll want to inspect the property, review all legal documents, and check for any potential issues like environmental hazards or zoning restrictions. This is your last chance to back out if something doesn't feel right, so take your time and err on the side of caution. Once you've done your due diligence, it's time for acquisition. This is where you finalize the deal and become the proud owner of a commercial real estate property. You'll need to negotiate the terms, secure financing, and sign all the necessary paperwork. Remember, a good deal is one where both parties walk away happy, so don't be afraid to negotiate and stand your ground. Last but not least, we have property management. This is where you take care of your investment and make sure it's generating the return you expected. You'll need to find tenants, maintain the property, and handle any issues that may arise. Remember, a well-managed property is a profitable property, and the more effort you put into it, the more you'll get out. Closing. Each step is crucial, and skipping any of them could lead to pitfalls. So, take your time, do your homework, and remember that the journey to commercial real estate investment is a marathon, not a sprint. Why should you consider investing in commercial real estate? The benefits are numerous. Let's delve into some of the key advantages. To begin, there's the income potential. Commercial properties generally have an annual return off the purchase price between 6 and 12%, which is a higher range compared to single-family home properties. This makes commercial real estate a compelling income-generating asset. Next, commercial real estate offers an excellent hedge against inflation. Unlike most other types of investments, as inflation rises, so too does the income you generate from your property through rent increases. This means your investment can maintain its purchasing power, even as the cost of living goes up. Thirdly, there's appreciation. Over time, your property will likely increase in value. This growth, combined with the income generated, can lead to significant financial gains. It's a long-term play that can pay off handsomely. Fourth on our list is the tax benefits. Thanks to depreciation and mortgage interest deductions, you can shield a good portion of your income from taxes. And if you decide to sell, you can leverage the 1031 exchange to defer capital gains taxes. It's a savvy way to keep more of your money working for you. Lastly, let's talk about portfolio diversification. By adding commercial real estate to your investment portfolio, you can spread risk across different types of assets. This can help smooth out returns and reduce the potential for significant losses. In summary, commercial real estate investments can offer you substantial income potential, an excellent inflation hedge, appreciation over time, significant tax benefits, and a means to diversify your portfolio. It's a compelling proposition for anyone looking to build wealth over the long term. However, it's worth noting that, as with any investment, commercial real estate comes with its own set of risks and challenges. It's not a guaranteed path to riches and requires a solid understanding of the market, the property, and the financials. The rewards of commercial real estate investment can be substantial, but it's important to understand the process and the risks. Like any investment, commercial real estate comes with its own set of risks and challenges. Let's start with market volatility. The value of commercial property is not set in stone. It fluctuates, influenced by a myriad of factors like changes in the economy, shifts in the local property market, or even alterations in zoning regulations. As an investor, it's crucial to stay informed and adaptable to these changes to protect your investment. Next, let's talk about property management issues. Owning a commercial property isn't just about collecting rent checks. It's about maintaining the property, dealing with tenant issues, and ensuring the building complies with health and safety regulations. If you're not prepared to handle these responsibilities, you could find yourself facing costly repairs, legal issues, or even tenant turnover. Now let's move on to economic factors. Commercial real estate is not immune to the broader economy's ups and downs. Factors like inflation, interest rates, and economic growth can all impact your property's value and your potential return on investment. In periods of economic downturn, you may find it harder to find tenants or maintain rental rates, affecting your income from the property. Additionally, there's the risk of oversaturation. If there are too many similar properties in your area, it could lead to increased competition and potentially lower rental rates. You need to consider the supply and demand in your chosen market carefully. Lastly, there's the challenge of liquidity. Unlike stocks or bonds, you can't just sell a commercial property at the drop of a hat. It can take months or even years to sell a commercial property, which can tie up your capital and limit your flexibility. Being aware of these risks allows you to make informed decisions and mitigate potential losses. It's about understanding the landscape, preparing for potential pitfalls, and having a strategy in place to navigate the turbulent waters of commercial real estate investment. Investing in commercial real estate can be a rewarding journey, but it requires thorough research, financial acumen, and strategic planning. Over the past 10 minutes, we've taken you through the essentials of this exciting investment realm. We started by introducing you to commercial real estate, emphasizing its potential to generate significant income and diversify your investment portfolio. It's not just about buying a property, it's about understanding the market, analyzing the trends, and making informed decisions. Next, we walked you through the steps of investing in commercial real estate, from finding the right property and securing financing to managing the asset effectively. We highlighted the importance of due diligence and the role of professionals in guiding you through the process. We also shed light on the advantages of investing in commercial real estate, which includes steady cash flow, potential tax benefits, and an increase in equity over time. However, we didn't shy away from discussing the risks and challenges involved. Market volatility, property management issues, and economic downturns are all factors that could impact your investment. So, what's the takeaway? Commercial real estate investment is not a get-rich-quick scheme. It's a long-term game that requires a strategic approach, financial astuteness, and a willingness to learn and adapt. It's about understanding the risks, making informed decisions, and staying committed even when the going gets tough. Remember, the key to successful investment is knowledge, patience, and consistency. Thank you for tuning in, and don't forget to like, subscribe, and share our content with your network.